Hello, traders. Cousin Benny coming to you from theclosingprint.com, January 7th, 2024. In this edition of your weekend video newsletter, we'll discuss the indices which are under pressure in the short term, but three indicators we'll cover this week show that the intermediate and long-term trends are fully intact. Support remains around 4650 to 4700, and resistance overhead is near 4800 to start the week. The S&P 500, as we mentioned, obviously you know that we're under pressure. We've pulled back about 2.5% from the recent highs after gaining nearly 17% from the October low into 2023 year end. With this great rally, RSI is trended back down below 70 for the first time since November, with many indicators giving us sell signals to start the week. We're now oversold in stochastics. There's a possibility of a bounce, with the S&P equal weight index removing the weight of those top 15 stocks on the left, holding near the highs and above the previous breakout level pivot that we saw in July, with the number of stocks above the 50-day and 200-day still in overbought territory, with the number of stocks declining versus advancing, pulling these ratios back below zero for the S&P 500, mid caps, small caps, and NASDAQ in descending order, setting up a potential bounce in the short term, while indicators like the ratio between S&P 500 stocks and gold, aka growth and stability, to gold, uncertainty and instability. We have a ratio that's beginning to turn, while also signaling the trend for the long term is intact. Additionally, when the market sells off, dividend yield momentum moves progressively higher. We can see that in this chart. And when it peaks, it signals there's a potential area of a bottom starting to form, where this momentum indicator tends to turn back down. In addition to the stocks versus commodities ratio, wherein we see the start of a bull market in stocks in 2023, commodities are usually declining as they have a strong tendency to lag. This means an early bird warning. We can see that the indicator is near equilibrium and has a long way to go to get back up to the previous highs like we saw back in 1999-2000 when the markets were exhibiting irrational exuberance, as Alan Greenspan was notoriously famous for saying. 2009, we had another reversal when the market started this secular bull market, and now we have a reversal that started in 2023 and continues to move higher, signaling the longer-term trend is intact. That said, small caps are pulling back. They were off the most last week, 3.72%. Still a bit of a range. It's possible that this could come back into and test the longer-term moving averages right around 180, 185. So that's left to be seen. RSI is turning back down. Volume did pick up last week, and MACD is still showing bullish momentum. So there's mixed signals here for the small caps. In addition, the NASDAQ and tech stocks have pulled back as well, showing selling volume for the entire week with a little reprieve on Friday, most likely shorts covering into the weekend. At the same time, the NYFANG Index, 10 stocks that we follow and trade during the week, RSI is starting to turn up. Stochastics is oversold. That could turn very easily this week. If we see any kind of follow through, we'll let you know to begin the trading session on Monday, Tuesday. The key once again this week will be what happens with interest rates if the 10-year yield gets rejected here at the 200 period moving average and we start to roll lower. That would be beneficial for stocks. That said, we do have RSI rising. MACD has turned, crossed over, and stochastics is rising. So if this was any stock, would be looking for a follow through. The key this week, again, will probably be yields. In addition, we need to pay attention to the US dollar, which did get rejected at RSI 50, starting to flatten out. Price action gave us a doji on Friday and Thursday. Moving averages overhead, 200-day is that magenta colored line. 50-day is starting to come back down. Could cross lower. The lows, of course, in July is a possible target, as well as the 200-day overhead. So keep an eye on the 10-year yield and the US dollar this week, along with any strength that we might see in sectors. Short term, we could see a little bit more weakness like we had back in September, October, leading to that bottom. Taken together, we also saw strength in healthcare, medical devices, biotechs last week to start, and then we went sideways for the most part. Financials are very strong, with JP Morgan closing at highs. The financials look supportive going into earnings this week, with the big banks reporting on Friday. JP Morgan, Bank of America, Wells Fargo. We got BlackRock reporting, and Bank of New York Mellon. Citigroup rounding out the list. So if financials continue to show strength, that would certainly be supportive for the markets. With most sectors overbought, we really need to wait for the opening bell on Monday. Keep an eye on the markets the first couple of hours. I wouldn't be in a hurry to do anything. Overall, we're looking for a bounce. If we do see that and stochastics can finally turn, note has yet to do so. So we could see a couple more days of weakness. That tells me to just take it easy on Monday, wait for a turn. Below 4,700, we're risk off. So there are trades that we're taking like bear call spreads in Apple, where we sold the 195, bought the 200 for protection. Looking for price to stay down here. As you can see, last week, all we had was selling with MACD and stochastics set up for a bounce. So in the short term, just sit on your cash if you're not into selling premium and wait for the markets to give us a signal to get long again. Remember, long term, indicators suggest that we are just in the early stages of a bull market. Just bear that in mind as we start the second week of trading for the month of January. This week, as usual, we need to pay attention to the IBD 50 list. There's a few more names, about double what we saw to start the new year. In addition, we have some scans where we have oversold stochastic turning, price action looking supportive, bouncing on Friday, with the airlines all doing the same thing. You can see Delta came back to the 200-day. You know the way that I like to trade. I don't like buying the highs. I like after a pullback in a otherwise bullish change of trend, 921 50-day, all turning back in November. Price action moving above the 200-day to start December. Stochastics is now turning. Last time it did that in late November, we had a nice rally. While it's not a guarantee, this is the type of action that we look for on a daily basis. Another stock, AirCap Holdings, AER, bouncing back above the 21-day, RSI rising. Stochastics has turned, volume picking up, so there could be the beginning stages of a reversal and a follow-through in the current trend. Berry Plastics, same idea, stochastics turning, volume picking up just like it was back in November. That led to a multi-week rally into the year end. Bright House Financial, stochastics turning, volume picking up. Looking for a bounce and a follow through, stochastics turning. IBN, ICC Bank, Limited, stochastics turning, MACD turning, volume picking up, 15 million shares trading hands in the last 3 trading sessions. Again, we have stocks like JP Morgan showing strength. Last week, closing at 52-week highs. Volume over the last 8 weeks or so just shows that institutions have been picking up shares. Now, in this case, stochastics is embedded, so I'd be less interested in JP Morgan, but I do like the fact that most of the sector is performing similarly, with Goldman Sachs at the highs, stochastics also embedded, volume picking up. Bank of America reports on Friday as well, along with Citigroup. Bank of America breaking out of a 3-week tight pattern. Citigroup trending since the reversal in October. Very nice volume last week. About 100 million shares trading hands. Stochastics embedded here as well. That said, continuing on with the scan with oversold stochastics and Royal Caribbean, Carnival Cruise Lines, Norwegian Cruise Lines, having pulled back recently, looking for a follow-through, volume picking up again, MACD and stochastics starting to turn. RDNT, Radnet, not sure what they do, but similar idea here. Stochastics turning from oversold, MACD turning, volume picking up, RSI back above 50. Voya Financial, nice reversal on Thursday and Friday. While the market's pulling back, stochastics and MACD turning, volume picking up. 1.5 million shares trading hands on Thursday and Friday. Stocks from the IBD 50, you can see Arista Networks, ANET. Look at the bullish 50-day moving average, 200-day moving average up and to the right. Occasionally we pull back like we have over the last week. RSI above 50. Stochastics about ready to turn. Hasn't turned yet, so we need to see a confirmation day to start the week. ANET from the IBD 50. Again, many of the stocks from the IBD 50, some of them from the healthcare group, which was strong last week. This is showing strength. Look at the volume as well. Stochastics not quite set up, but action is bullish. ASND with a nice bullish engulfing candle, taking out the previous 3 weeks of trading from the highs and the lows. With additional stocks, oversold stochastics like Atlassian, TEAM, Axon, Bank of Ozark, CrowdStrike. You can see all of these are turning. Datadog, Dexcom, DoorDash, looking for a bounce off the 50-day moving average. Elf Beauty, turning. FTAI Aviation Limited, FTAI, holding the 21-day, stochastics turning. KKR, Melli, Mercado Libre, showing up, looking for a turn there as stochastics pushes higher. CRM, Salesforce, oversold stochastics, looking for a bounce. Not as nice a setup as some of the others. Supermicro, many of you have been trading this. We've got a higher low on stochastics. It is turning, looking like price might push off of the 21-day moving average. StoneCo, a Brazilian company. I believe they're in the finance business. Make sure you check that out. Always check when the earnings dates are on many of these stocks. While they might be a nice setup, if they have earnings in the next couple of days, you don't want to take a new position. ServiceNow looks good. Snowflake looks good, turning. And Monday.com with a bounce near the 50-day. Not as nice a setup as, say, Royal Caribbean or Carnival Cruise Lines. All of these look really good. Stochastics turning hard, volume picking up, price back above a bullish 9, 21, and 50-day moving average. Okay, traders, this is going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com, Sunday, the 7th of January, with your weekend video newsletter. I'll send out a watch list later tonight around 9:30, 10 o'clock on the West Coast, around 12 midnight on the East Coast, so be sure to check your inbox for that. Otherwise, take care. We'll see you in the morning. Ciao.